Good afternoon. Welcome to our first ever Jemena and Deloitte virtual event. Before we begin, a reminder that the event is being recorded and attendees will be able to access this recording after the event is finished on our website. We're thrilled to be a part of this event. It's a great example of collaboration, and that's so important at this time of such rapid social disruption. We've got nearly 300 attendees registered for today, which is fantastic. About 150 of them are external guests and a really sizable Jemena contingent as well, so welcome to you all. The appetite to be part of this shows the level of commitment there is to supporting the people and the communities in which we operate. And certainly, at Jemena, we're really committed to achieving this. With, of course, the support of the Energy Charter. And so I'd like to thank Sabine Heindel for joining us today. Her work with the Charter has been central to encouraging cross-industry collaboration. Today's a really important moment as we reflect on the information that we've heard from customers so far, and we plan for the next phase of community support during the pandemic. It's really important that we come together at these times, share the information openly, collaborate, discuss, and understand together how best we can support the people and the communities in which we operate. In thinking about those communities, I'd like to pay my respects and acknowledge the traditional owners of the land on which we now meet. I pay my respects to their elders, past, present, and emerging. I also pay my respect to all Aboriginal and Torres Strait Islander people. And I hope that the path towards reconciliation continues to be shared and embraced. So for our session today, first we're going to hear from Sanj Pereira from Deloitte. He'll be sharing with us results from research he conducted recently into the impact of COVID-19 on electricity customers in the Jemena network. We'll then move on to a panel discussion. We've got a fantastic panel full of experience, so it's very exciting. So very quickly, I would like to welcome Lynne Gallagher from the ECA, Cynthia Gabert from Victorian Energy and Water Ombudsman, Angela Jarrett from Deloitte, Emma O'Neill from the Consumer Policy Research Centre, and of course Sean Reardon from Jemena. A very warm welcome to you all, and I will introduce them all properly before we begin our panel conversation. We'll start the panel discussion with some questions that have already been submitted. So thank you very much to all of you who have submitted those questions. And we have lots of them. We're hoping to get through a fair few of them. But also, if you would like to submit any additional questions, there's a Q&A section on the right-hand side of your screen. So if you'd like to submit them through there, then we can moderate them and publish them and pose them to the panel for you. One final admin point. After the event today, you'll receive a placemat with a summary of the research on it, just as a reminder to help us all keep customer vulnerability front of mind. So without further ado, let's get into it. I'd like to introduce Sanj Pereira. Sanj is consulting partner at Deloitte with over 20 years experience, the past 4 years as partner. He specialises in customer-led strategy and business transformation, helping clients to understand their customers, develop innovative products and service propositions, and implement the operating model changes needed to deliver tangible value. He specialises in energy and has delivered projects in both retail and heavy asset industries. Welcome, Sanj. Really looking forward to hearing what you've heard from our customers.
Excellent. Thanks, Kate. It's a pleasure to be here this afternoon on a cold Melbourne afternoon, and really like to extend my welcome to everyone on the call today. So as Kate mentioned, Deloitte was engaged by Jemena to conduct research into its customer base, and I intend to spend about half an hour going through the outputs of that research, and obviously, you'll think of questions as you see the research. Please add them into the dialogue as you go through, and we'd be obviously keen to answer some of that as we go. So the study was conducted to help understand changes in customer behaviour in hardship, electricity consumption, sentiment, and how behaviours have changed since due to the COVID-19 pandemic. The research was primarily conducted on Jemena's electricity network, which has about 343,000 customers. The way we conducted the research was through a online questionnaire, which was roughly about 20 minutes, and which is about 60 questions that we asked the customers that responded. So it's quite a rich set of insights that we got from it, and I'm only just walking through the headline insights in this pack, and I think Jemena is going to make the full report available in the website, as well as the placemat, which summarizes the key points there. So in terms of what we covered, and I'll just go through a quick list of the things that we talked to customers about. One was about impact of the pandemic on jobs and work, impact on income. We asked customers questions on how long they believe their incomes will be impacted, what support they're getting, what support they need, their energy use, the profile of their energy devices, expectations on bills going forward. You know, do they think there's going to be more or less? What actions they're taking to reduce bills? And also we had a few propositions we tested as well in terms of understanding what resonates and what's going to be the most useful for customers going forward. So in order to make this representative of Jemena's customer base, we adjusted the respondents to age and gender. So we made the sample that we got back representative of the age and gender that within the Jemena's customer base. And the survey was administered in the last week of May. So as you probably appreciate, it's been a bit of, it is a bit old now, and this was before we had the second wave. So I think if anything, what you'll find out of this is that you'll see that the issues that have been raised in these are being further exacerbated by the fact that we now have a second wave well underway in Victoria. So we had 921 respondents to the survey, and we obviously qualified that by the postcodes and the age and gender demographic we talked about. We covered a number of things. I covered a mix of what was covered in the survey. So we do make the disclaimer that it was a digital survey in English. So it's likely that there are some residents who, either because of language or technology accessibility, have not been able to access this survey. So in broad sense, it's representative, but we acknowledge that there might be some gaps in terms of the feedback we've heard. So I'm going to dive straight into it, and as I said, spend about half an hour going through what the key findings were. So just starting at the top in terms of the respondents and whether they were employed, unemployed, and what their current employment status was. We found that about 65% were employed, and this is a mix of full-time, part-time, or self-employed. So 40% were full-time, 21% part-time, 4% self-employed. That made the 65% of the employed group there. In terms of unemployed, there were about 6% that were unemployed, and you then have carers or retired, or their full-time role was looking after other people, and there were students as well. So that's how the whole sample broke down across when you looked at employment status. So I think the key thing here is that there were 6% at that time who said they were unemployed. And when you look at Deloitte Access Economics research or projections, and these are all publicly available, there's a forecast of around an 8.5% unemployment rate by 2021. So we obviously see that unemployment number will increase as time goes on. We also then ask questions around have incomes increased or decreased So you see there that there's a fairly sizable number there, 44% of people who say their incomes decrease a little bit or decrease significantly. The distinction between a little and significantly is a little is less than 10%, significantly is around between 10 and 30%. And interestingly, also there are 12% of people that say their incomes have increased either by a little or significantly. And some of this, when we analysed for in a bit more depth, was due to the fact that there were supplements. They were either working more jobs because they've had to take on more responsibility, or in some cases the income supplements are actually giving them a bump in income, which is a short-term thing that will obviously go away. So we also, for the people that have been affected either by an increase or decrease in income, we asked them how long they expected this impact to be. And this is obviously from May, and you can see that there's about half the population thought that this was going to be between 1 to 6 months, so relatively short term. I mean, even back then there was about a quarter of people that thought it was going to go for 10 months or more. So I would suspect if you run the research again, you'll find that these numbers have significantly shifted, and you'd probably see a lot more in the 10 months plus category there. We also then tried to look at how reduced hours or job losses have impacted income, and you can see there that about 40% of people have said that they've either had hours reduced, or there are 11% of people who said they've lost jobs or are unemployed. I mean, I talked about a 6% number earlier in the pack in terms of unemployed. I mean, this could be the 11% here is potentially there's people who've lost jobs or found something else, or have become students or become carers. So there's the 6% is that I talked about earlier on is people who've lost jobs who are actually actively now looking for work. So when you get underneath the numbers, there are movements back and forth where people have lost jobs or found other things or have transitioned to other categories of work. So we looked at, obviously wanted to understand how people were supplementing income. So the interesting thing here is about 27% of people were either on JobKeeper or Job Seeker. So that is a significant number, as you could imagine. Interesting thing here as well is that you have about 8% of people that have reported that they've drawn down on super. So when you look at the cohorts underneath this, there will be people who've got JobKeeper and have drawn down on super. So there are all these combinations that you'll see underneath covers, but this is in terms of absolute numbers of people who are getting one or the other. So yeah, so the numbers are quite significant. So we also looked at for the people that have been getting JobKeeper or Job Seeker, how concerned are they about their ability to pay their electricity bills? So we had about 45%, or just under half, who were either reasonably concerned or very concerned about their ability to pay their bills once the JobKeeper and Job Seeker schemes were cut off. So yeah, that's also once again a fairly significant number of the 27% in the previous page. We then shifted to talking about their electricity bills and what their expectations were. So we, I mean, not surprisingly, given a lot of people have been at home, we are seeing that there's a significant portion of people that are saying that they believe their next bill would be either a little bit higher or a lot higher. So about 60% of people are expecting a higher bill. And obviously we think this is due to the fact that they're working from home, and that usage of energy, which they typically would be at work, has been transitioned to their home lives. And we also asked about people who've inquired or accessed additional support through this period, and about 37% of people have either inquired or accessed additional support to support their household finance. So this is not just energy, this is across all their household finances. And on the next page, you can see rent assistance was just under 10%, and then you had mortgage repayment assistance, internet or phone bill, grocery. They were all around the 7 to 8% of people who've asked. And once again, this is not looking at the compounding effect of people who've asked for a combination of these things. This is just purely the people who've asked for one or the other. We were interested in understanding what communications or what notifications people have got from their retailers. I mean, we can see there's a fairly large chunk, about 78% of people said they haven't received communications or were not sure whether they've received anything from their retailer about the additional support that was available to them. I mean, we see this quite obviously it's a low involvement category. It has obviously gone up in involvement as people are staying at home, are conscious of their bills going up, but there's still an element of indifference in whether people are getting comms. They may have got comms and they didn't know about it, but we're seeing a big chunk there of 80% of people roughly who are saying that they haven't heard. I mentioned that we looked at propositions. We did test a few propositions. So there's a range of things we tested. So the biggest response there, 34%, was where we said, reduce bill for 3 months and return to normal. So that was the most attractive proposition for customers in terms of helping them through this period of difficulty. So cash in hand. So that's really cash in hand versus the next option, which is get your normal bill, but get 50% cash back for 6 months, so for a longer period. And then the other options were get cash back and reinvest that in things like solar panels or energy efficient appliances. So what's really coming out of this is that customers are really interested in having that immediate relief or cash in hand, as opposed to having other schemes put in place where they can get a bigger benefit over a longer period of time. So I thought that was quite interesting in terms of what customers are preferring at this point in time. We also wanted to understand how customers were willing to respond to things like demand response or demand management, and we did find that more than half did find remote switching of appliances during peaks to be something they'd be interested about, either somewhat appealing or extremely appealing. And the idea was, obviously, if it's tied to reducing cost, they found that this was something that they'd be willing to subscribe to. So this is also an interesting proposition to think about when we think about response to the pandemic, and then going forward in terms of being able to reduce costs, peak energy costs for customers. It's a bit of a busy side, but what we also looked at was spend a bit more deeper analysis into a number of subgroups. So we wanted to look at the JobKeeper, Job Seeker group and look at what their demographics were. So they're more likely to be younger, living with their families. Interestingly, they did have a bit of a bump in income because of JobKeeper and JobSeeker, but they did recognise it was a short-term solution, and they did highlight concerns about being able to pay their bills once the supplements ended. The second group we looked at was people who had reduced hours as a result of COVID-19. The biggest portion of these were business owners. They were this is more small business owners, and there were people on JobKeeper payments, and very similar to the JobKeeper Seeker piece. They were concerned about their ability to pay bills once the supplements ended. The 11% I talked about who'd lost their jobs, they're likely to be in more sustained and continuous hardship, and the significant portion of these people, 62%, were concerned about their ability to pay their bills once the JobKeeper Seeker supplements ended. So these groups are not mutually exclusive. So there is a mix of them, but it's good to kind of look at what's driving the attitudes and what's different about them, and that's what we were trying to really understand as a result of this analysis. We also did a very simple segmentation, and we looked at essentially the income impact versus the expected duration of impact. So this is really self-reported. So if customers said they were adversely impacted in terms of income, so that's the decrease slightly or significantly, or they had a bump in income because they had other jobs or more hours or supplements, versus how long they expect the impact to go for. So I'll just quickly walk through what some of the groups were and what we thought was interesting. So the Optimist Group there were, so they experienced declines in income, but they expected this to be short term, and it's mostly due to reduced hours, and they mostly tend to be younger people. So we call them optimists because we think that because they believe that this is a short-term condition for them and that things will kind of right itself. And this is back obviously in May, and it's about 6% of the respondents were in this category. 14% we put in the Warriors Group. They tend to be between age 25 and 44. They were concerned about their bills. They felt like the situation was a medium-term issue for them. Most likely to be self-employed. They had drawn down on super. They were more likely to have drawn down on super than the other groups. That's about 14%, as I mentioned. The Left Behind group was about 19%. So a lot of the people who had lost their incomes, lost their jobs, were in this group. They'd withdrawn a lot from super, and they were most concerned about their ability to pay bills. The Short-Term Advantage group, they're about 7%. These people had a bump in income either due to, and mainly due to their JobSeeker, JobKeeper. So they did understand that this was a short-term situation, that supplements would end and they would need to go back to the new normal. The planners were about 3%. So we call them planners because they did recognize that whilst they had a bit of a increase in income, they were saving more. They were changing their behavior in terms of switching their lights on and managing their energy profile and usage. So they were planning for a longer term impact of this. The detached group were people who they tended to be more people who were either retired or carers, so they were already receiving supplements and income, so they weren't as worried because they felt like they had their the money was coming in, and they were managing their energy profile and reducing the energy usage, but they weren't as engaged in trying to change behavior. The unaffected group were essentially people that said they had no real impact from their income or job, so they weren't asked the question of how long they expect the duration to be, so they were excluded from this analysis, but kept there just to make the analysis complete. So I might just stop there. That is essentially the summary of the research. There is a more detailed report that covers a lot more of this and in more in depth, that'll be released a bit later today. And I might hand back to you, Kate.
Thanks, Sanj. We've got a couple of questions coming through on the chat, so I'll pose a couple of questions to you, people looking for a little bit more information. So one of the ones that's been voted up, so clearly a few people are interested in this. Of the people who are employed, how many of those are working from home or still going in? Do we have that sort of level of information?
Yes, we do have that in the analysis. I don't have it handy. Just from memory, it was 60–70% of people that were working from home. So a significant number of people were working from home. So there was a mix of, there's working from home, purely a mix of working from home and going to their offices and then working on site. So we had all that information. So it was a very high proportion that were purely working from home and hybrid.
Okay, I think there's another question, just checking on some of the propositions that were put forward. And I think a bit of a concern that for some of these, people are storing up debt. So in particular, for the immediate relief package, is that something that was a payback later type concept? And is there a concern there about storing up debt, or are people just so desperate that they want some initial help now?
Yeah, so it was the latter. So the question was framed around immediate relief, so they don't have to pay that back. So the 3 months was immediate. So obviously these are just abstract propositions we tested. They aren't actual propositions that are being rolled out by either the retailers or the distributors. So in that particular case where I've got the 34% up on screen, they didn't have to pay that back. So that was basically just a rebate or a immediate relief. Yeah.
Great. We've got a couple of people interested to understand what you, Sanj, personally were surprised about in doing this research. Did this research sort of confirm what you thought was going to be out there, or actually were there some things that you found that you sort of thought, I wasn't expecting that?
Yeah, I mean, I guess we all knew that these schemes were, I mean, I think the number of people on JobKeeper and JobSeeker were, I mean, that was a bit higher than we thought. So that was a bit of a surprise. And also people have drawn down on super, the 8% there. I think that was surprising. I think the duration of, how long people thought, sorry, I'm just flipping around, apologies if that's distracting, but the duration that people thought that this was going to go for, I think, people thinking that it will go for a shorter period of time. I think that, I mean, given the benefit of hindsight now, you can obviously look back and go, well, that was wishful thinking and this was going to go for longer. So I think that was interesting for us. Yeah, so I mean, it was the good thing was we can quantify some of this data. So we all knew that these factors were there, but we just didn't know how big they were. So that was the most useful part of the research, I think.
That probably also ties in a little bit to the final question here, which is really about anxiety and stress. Did you ask any questions? Did you uncover anything about the level of anxiety and stress and how that is playing into people's perceptions?
Yes, I mean, there were some questions on physical, I believe it was physical well-being and emotional well-being. So there was, so we didn't see that play through as much as we thought. But I mean, this was back in May, obviously now. I think if we were to do that now, we might find that a little bit more heightened, would be my sense. Yeah, so I think it's a good question, and that's definitely one of the things to explore a bit deeper if we were to rerun this research down the track, more drawing out those psychographic elements of how people are feeling and thinking. Yeah.
Yeah, thanks for that. We do have another couple of questions, but I think I might open it up for the panel. So I'll introduce our panelists and we'll get a sort of a broader conversation, because I think some of that sort of consumer impact and understanding the voice of consumers, some of our panelists can help to bring that into the conversation as well. And so I'd like to introduce firstly Lynne Gallagher. Lynne needs a very little introduction. She's the interim CEO of Energy Consumers Australia, an organisation that is the national voice for households and small businesses. Prior to taking up this role in March 2020, Lynne was the Director of Research at ECA. The ECA undertake research into people's experiences, expectations and their aspirations for the future energy market, which then informs and shapes the ECA's advocacy and their collaborative partnerships, with the aim that markets are actively designed for how people live, work and run their businesses. Welcome, Lynne. Next, I'd like to introduce Cynthia Gabert. Cynthia was appointed as Victoria's Energy and Water Ombudsman in February 2012 and has worked at EWOL for 11 years. Before joining, Cynthia was the Chief Executive Officer of the Australian Commercial Disputes Centre. Cynthia is an executive member of the Australian and New Zealand Ombudsman Association and is alumni of Leadership Victoria's highly sought after Williamson Community Leadership Program. Cynthia's got a master's degree in dispute resolution from the University of Technology, Sydney, a bachelor's degree in law and political science from the University of Sydney, and she's a graduate at the Australian Institute of Company Directors and a Director of Thriving Communities Partnership. Welcome to you, Cynthia. I think the perspective that you're going to bring from customers is a really interesting one. We also have joining us today Angela Jarek. Angela is Risk Advisory Partner at Deloitte, who seek to help the power and utility sector embrace regulatory disruption. And what a time of disruption. Through her deep and trusted relationships, her tenacity and her fast adoption of tech-enabled solutions, she helps businesses deal with situations just like the one that we're going through today. She's a regulatory compliance risk professional with over 19 years of experience working in Australia and across the Asia Pacific region, with a focus on helping clients navigate disruption in both regulatory and stakeholder expectations and in understanding the impact of this change to business processes, controls, customers, third-party relationships and operational performance. Welcome, Angela. I'd like to introduce Emma O'Neill. Emma is Research and Policy Director at the Consumer Policy Research Centre. Emma was previously Energy Policy Advisor at the Victorian Council for Social Services, and prior to that had a career in law and legal policy, including advising the ACCC and other regulators as a senior lawyer at the Australian Government Solicitor. Now, interestingly, and I'll be keen to hear a little bit more about this, so Emma recently authored a report for the Australian Energy Regulator on regulatory approaches to consumer vulnerability, and I'm sure that will come out in our conversation. Welcome, Emma. And last, but certainly not least, is our very own, Jemena's very own, Sean Reardon. Sean is responsible for the oversight of Jemena's electricity distribution business, which services customers in northwest Melbourne. This includes responsibility for strategy, commercial, regulation, customer service, asset management, network operations, and much, much more. Sean has over 26 years of experience in the energy industry, having held management positions in marketing, regulatory management, strategy, and commercial. Sean holds a Masters of Marketing and a PhD in Mechanical Engineering and is a graduate member of the Australian Institute of Company Directors. He's also past president of the Australian Pipeline and Gas Association. Welcome, Sean. What a great panel. It's great to see so much female thought leadership, particularly in an energy industry. It's brilliant. But it's also really fantastic to have such a broad range of perspectives. And I just think that's so important at a time like this to really be pulling on all of the expertise that we have across the industry to put our minds to the challenge that's before us. So welcome, really looking forward to this conversation. A reminder to everyone, you can still continue to ask questions through the Q&A, and you can also vote up other people's questions. So we'll try and get to the most popular questions first. And thank you to everyone who pre-submitted your questions. Our plan is to start with some of the pre-submitted questions. And so why don't we kick off our conversation? So one of the first questions that was submitted, and I think this goes to the heart of this sort of cross-industry collaboration. And so, Sean, I'll put this one to you first. How can energy businesses across the supply chain practically work together to support customers in light of COVID-19?
Thanks, Kate, and good afternoon, everybody. Thanks for joining us today. Look, it's a terribly rich topic that we're dealing with today, and really fascinating. So a good place to start is how's the whole energy sector coming together. And I'd like to just reflect a little bit on the Energy Charter, which has become a really important part of the industry framework. It provides an industry umbrella for how the energy value chain can work together across retailers, distributors and generators. So, thus far we've got about 20 businesses across the country working with that central purpose to put customers at the centre of our industry. I can talk to just a couple of examples about how that's helped to date. And one of the things is that Jemena, in conjunction with PowerShop, has led the creation of the Energy Charter's Community Content Hub, which is something that helps share best practice in communications and really looks to stop us reinventing the wheel in terms of things that we're all doing for the benefit of customers. And what that's done is it really helps us get communications, quality communications out to customers a lot sooner, also lowering production costs. In fact, one of the highlights has been the industry coming together and leading with translation of some of these communications into multiple languages. I think we've got to 9 languages in total so far to really help our culturally, linguistically diverse customers across the industry and share some of the things that E&A and Energy Charter have put together as good customer messages. And probably the other one I'll just reflect on briefly has also been the customer billing relief, which has been led by retailers in the industry, really important part of acknowledging what customers are going through and what we've heard from Sanj in terms of those financial circumstances, but also the aligned support that's come from networks as well, with commitments that have been provided under a network support package. So that package goes on, and we've now got rule changes that the regulator's weighing in on to provide that sort of codified support into the future. And many other examples, but perhaps we can talk more about things like planned outages and disconnections and that a little bit further. But yeah, really proud how the industry has come together and galvanised under that Energy Charter banner.
Thanks, Sean. Angela, I might put that question to you then next. As an observer of the industry, what have you seen in terms of that sort of cross collaboration?
Thank you for your time, Kate and Jemena. So across the industry, it didn't need COVID to bring the supply chain together. I've seen quite a bit of collaboration pre-COVID, like Sean mentioned, around the Energy Charter. Also saw at the sort of the beginning point of COVID, the industry coming together to revisit where they needed to sort of tip their efforts into. So we saw the initiation with AEMO, AER and the AEC on stopping some of the reform that wasn't necessarily going to benefit customers in the short term during COVID. Also have seen a lot of new regulation come to the horizon, a discussion of new regulation and guidelines that have filtered through and been well resonated and received across the industry. In addition, I think there's also an opportunity to lift it up from the policy and filter it through to the business. Some of the initiatives are really good things, right? And there's some really good stuff coming out through it. So there's an opportunity to filter it through to the controls and the processes into the business. I mean, during COVID, following a lot of the energy clients, I've noticed there's some really good data coming out there and some really good communication around what they can stop and start doing through social media. Also noticing that the regulators have been publishing some really great reports with voluntary data that has been provided to them. When I stand back as an observer, there's an opportunity to really bring all this information together collectively, one single point of contact, so we can reflect off the data and form a view on what our customers really are expecting from the industry. Furthermore, I feel that there's an opportunity to really, coming at the back end of this month, we're going to see some increase in call volumes. What I've sort of noticed and observed in the media with financial services, there's been a lot of investment into call centre staff to pick up on mortgage discussions post that 3-month probationary period where they held off mortgages. I really think that at the end of this month, we're going to get a bit of an increase of volume. There's an opportunity for the supply chain to work together on how they can support each other through that sort of peak in demand, whether that's flow through to distribution call centres or to other types of industry call centres. I think there's an opportunity to give thought to that.
Thanks, Angela. As we heard in the research from Sanj, clearly there are a lot of customers experiencing some vulnerability. So Lynne, I'm keen to hear your perspective on that. How has this situation exacerbated existing customer vulnerabilities and even created new customer vulnerabilities?
Yeah, thanks, Kate. I won't steal Emma's thunder because I think you may go to her, and she's done a very excellent report that I'd like everybody to know more about. But I'll just make a few comments. I think what we've seen, and we've all seen it in our own families, in our own lives, in our own communities, and we saw it on the TV with, it's hard to fathom a world now in which 3.3 million people are on JobKeeper and 1.5 million people are on JobSeeker. And that means in a way we're all vulnerable now. We're all one event, one bill away from maybe not necessarily struggling to pay our bills, but worrying, can we pay our bills? How will this all work out? And I think there are both opportunities and challenges for the energy sector in this, because consistently in the research that Energy Consumers Australia's done, we've seen people tell us that they're very confused. They don't know how to connect the decision they make about using energy, turning on their heater or turning on their lights, or when they use their washing machine, how that impacts on their bill. So I think we're going to have to dig really deep now as a sector to start tackling some of those problems so people can actually feel that they're in control and they don't have to have that kind of anxiety and bill shock that may be even a worse thing to happen to them now. So I'll just leave the room for Emma to come in.
Yeah, thanks, Lynne. Just before we do move to Emma though, interested in your perspectives of what do you think are some of the best ways that we can support these customers going forward?
I think one of the things we've done is we've been very good at designing frameworks for people in hardship and defining hard boundaries. I think what we actually need to do now is trust consumers, trust families, trust businesses, and say to them, if you need help, let us know and we're there. I think we tend to try and define, well, whether you're eligible. I think right now, we need to be making it easy to access payment plans or deferral. We need to make sure people are aware that the help is available. There's some work that CPRC has done, other research they've done, and it's confirmed in our own research. 70% of people who said they were most concerned about whether they could afford their energy bill or any other bill hadn't reached out to their energy company to get help. And we're not quite sure why that is. So that to me is worrying. So awareness, letting people know, don't be afraid to come and ask us for help. And the other worrying thing is, of the people who did ask for help, they didn't find the information useful. So again, we're going to need to think harder about how we do actually reach people and support people.
Yes, and we saw that in the research that San shared, and I think we'll talk a little bit more about that later. But if we can move to you, Emma, now, I'd love to hear a little bit about the research that you've done and your take on this vulnerability.
Thank you, Kate, and thank you for inviting us here today. And congratulations to Jemena and Deloitte for doing this research. It's going to be so important to find out what's happening on the ground over the next 6 months, the next sort of 2 to 3 years. This is going to be such a long-term event, and the ramifications are going to play out for some time. So as Kate said, we've conducted our own research, and this is going to run for the next, or over a 6-month period. From May to October, looking at consumer experiences across a range of sectors, including energy. And similar to your own, Jemena's own research, it is showing, quite broad concerns about ability to pay for energy bills. So across the board, we're seeing almost 30% of people concerned about their ability to pay for energy bills. So that's regardless of income. There are more pronounced concerns among some groups. So what we are seeing is an amplification of existing vulnerabilities. So for example, and this may be something that energy businesses want to bear in mind in terms of how they target their assistance, although I absolutely 100% agree with Lynne that we are now dealing with a situation of very broad vulnerability, but nonetheless those some groups are experiencing more pronounced concerns. So for example, people with disability, just over 40% of people with disability are concerned about their ability to pay their energy bills. And one of the things that's going on here is that people with disability already have higher energy costs. Those costs are often increasing because of COVID. And for people who are on the disability support pension, they haven't received the COVID boost that people on job seeker and youth allowance have. We're also seeing heightened concerns among renters. Again, you had a lot of pre-existing vulnerability there. Much more likely to live in energy-efficient housing than owner-occupiers. And another key group is casual workers. So again, the chickens are really coming home to roost in terms of the high reliance on casual work in Australia. They're a very vulnerable group of people. In many cases, they have unpredictable and fluctuating incomes. It's difficult to manage bills. About 40% of casual workers are concerned about their ability to pay their energy bills. And as we know, there's a high proportion of casual workers in the industries that are really being decimated by COVID: hospitality, retail, tourism, and many of those casual workers aren't eligible for JobKeeper. So they're very, very vulnerable. Something that we did really want to emphasise too is that there are some emerging vulnerabilities as well. So there is that group of people who have perhaps enjoyed relative financial security until now. Maybe they were working for an airline, or they had a stable ongoing work, and that's the rug has been pulled from under them. So they may not know where to access support in the same way. They may be much less used to self-advocating. The other really big group is, and this is coming up in our survey again and again, is the impact of COVID on young people. And this isn't going to be a short-term effect. We're looking at, really quite deep generational impacts here of a very difficult labour market that young people are entering. People in that early 20s bracket have been really affected by the rapid job loss and wage declines that we've been seeing since May onwards. They're accessing super early at a much higher rate than other age groups. And this recession will have a long-term impact on their labour market prospects, and we're seeing the effects of that in this survey. So high levels of financial concern, and including about energy bills. In terms of what can be done, I think very much support Lynne's comments about that. There's a really big gap between the support, there's often wonderful support that exists. You know, the payment difficulty framework in Victoria is fantastic, but a lot of people just simply don't know about it. We've seen that in the Jemena research. We've seen it in our own research. So only about 7% of people reported receiving helpful information about payments from their energy retailer. Only 4% received proactive offers of payment assistance. Rates of information about concession support were really low as well, around 3%. And that's pretty striking in an environment where you have had this huge additional uptake of job seekers. So there are all these people who are now eligible for concessions who just don't know about it. So getting the word out there is really important, and we may need to rely on perhaps some different channels this time round. I think it was really good to see the Energy Charter supporting those communications out through NUS, the National Union of Students. So recognising young people are in particular strife and using channels like that. Multi-channel communications, I think, are going to be really important too. So not just phone-based communications, but looking at things like two-way text and that, recognising that mental health issues like anxiety and depression are on the rise, and that is going to make it more difficult to for people to communicate with their energy retailer. So there'll need to be a variety of options that cater for those differences. I could go on about other things, but I don't want to take up too much time, Kate, so perhaps we can return to those later.
Well, I might just draw your attention just quickly to one of the questions that's come through, which is, what are the channels to reach newly vulnerable customers about the support they can access without stigmatising, alienating customers? So I thought that was an interesting question as you're talking about, you know, trying different channels. Which ones are the channels that are less isolating for the people that we're talking to? Yeah,
and I think it's a really good point, because it is about, normalising that assistance. So, for example, if people, I think looking at that union channel is really interesting, that people will often be seeking advice through there at the moment about, what are their rights, and if some energy information goes out through as part of that, it kind of normalises that support. I think there's also a role. The case study of mortgages has been really interesting. There's just been a lot of mainstream media coverage of the support that's available from the banks, and obviously that's getting a lot of, that's being driven by government. So there's probably a role for government in driving this too. But mainstream media communications about the support, I think, is really important, and normalising it that way.
Yeah, clearly the communication around this is critical. If we think for a moment, though, about some of the measures that we have taken as an energy industry, so I'm thinking in particular about the moratorium on disconnections. Cynthia, I'm wondering what you've heard through the Ombudsman in particular. How has that impacted customers, and what do you predict will happen as retailers start to reintroduce disconnections?
Thanks, Kate. It has actually impacted customers significantly, to the point that there are no complaints coming to our office about disconnections. So that's a really positive outcome in the circumstances. We're talking about people being able to access an essential service, to keep themselves warm, to feed themselves, and to have some element of safety. So I think it's a fantastic initiative, and really very much the right thing for industry to have done in the circumstances. What worries me feeds on so many of the things that Emma and Lynne have already mentioned as well. There are going to be so many customers who at this point don't even know that they're able to access assistance from their retailers. I think the survey had 78% of people not sure if that even had an offer of help being put out to them. If you don't know that there's help available to you, and over the coming months we start to see some of the income supplements being wound back and income support being changed, we're going to find customers who are going through a credit recovery process that some of which they will never have been through this before. So they won't be aware of what their rights are to some fundamental entitlements under the payment difficulty framework, like being able to defer bills, smooth them over a longer period of time, payment plans, concessions, and all those sorts of things. So I think that that's going to be a really important test of the industry, of how they work with customers, particularly those that don't know that they're entitled to assistance, so that we don't find that we have this big bulge of customers being disconnected, with all the cost and stress and anxiety that's associated with this, particularly if we find that we continue to go through waves, and the COVID impact does continue to extend for many more months than people originally thought it would.
Yeah, and we've got a question which I think is pertinent for you, Cynthia, which is, have you heard anything from customers about the information that they are finding useful? You know, can we take some of that information and amplify some of what they are finding really helpful?
What we are seeing is not so many customers contacting us about credit issues, which suggests that for those that are getting in contact with their retailers, the retailers on the whole are doing a good job. Where we are seeing more customers contacting us, and that goes a little bit to what Lynne was mentioning before, people are starting to feel the pressure of the high bill, the being at home, not really aware of how much it's going to lift, particularly given it was a cold start to winter, how much it's going to lift. So I think one of the challenges for industry is to not just focus on that we're here to help you if you can't pay your bill. We actually are sharing some of the information. I know E&A have sent out some really good stuff on how much $1 a day buys you in terms of usage, particularly around gas. Those sorts of messages I think are really important. But to Emma's point before, some of that coming through mainstream media is going to need to be really, really done cleverly, because industry still has a trust issue with consumers, and normalising it and it churning out through mainstream media, where we can all assume trust ebbs and flows, but people can work out whether or not they want to hear it in a way that if it's being shoved down your throat a bit by your retailer, and I know I don't always read all the inserts that come with my bills, it's not going to impact in the way that we really need it to. Thank you.
Going back to that question of disconnections and sort of learning from the experience of the measures that we have put in place so far, Sean, as a network business, as an implementer of these sort of measures, what's been the Jemena experience?
Yeah, look, I must say it does seem a lifetime ago that we started to confront this issue. It was one of the first things that really came up on the table as COVID hit us around March this year, when it became very mainstream for the community and our customers. And there was a lot of confusion early on about how to handle it. We did take a pretty strong stance early on with refusing to disconnect customers, and did get involved in those conversations with regulators about what was the right way to be able to oversight this, as we're a lot of companies working out the right thing to do. But I think where we've come to as an industry with the moratorium, it has been probably the single most important thing that's helped our customers get through this situation, the number one thing, because it does put customers in a situation that, well, I suppose it's able to sustain themselves for now. And that's been credit to the quick work of regulators. AER and ESC have sat over the top of that really promptly. But it doesn't mean the problem's solved. We heard from Sanj that as 40% of our customers have had decreases in their household income, but that's compounded by their electricity bills at home going up 10 to 30% as well. So this problem is there. It hasn't gone away. And I think the big risk is when government support comes away, when the retail hardship plans, as they mature, what happens next? And that's where I think, if disconnections for non-payment are introduced, that would be a rough ride for everybody, because customers will react badly. They'll have legacy debt potentially, and the government support removed, so being very sensitive and vulnerable. Cynthia's office will become extremely busy on this front. I can see the media can be involved and really lead the industry and regulators to have a rethink. And so that's probably the big question as to where do we go at the end of all this as the government support sort of falls away. And how do we come up with a response through industry, government, to be able to clear these things so that everybody can go forward from a neutral and level playing field.
And we've got a question which goes to that, Sean, which is, doesn't the long-term deferral of paying for consumed energy ultimately push up the price of energy and offset bad, doubtful, full debt?
Yeah, look, that'll be really a policy question that we'll need to debate around the industry. There certainly is that accruing debt, and I can't imagine that, because we don't know how long this issue is going to prevail, do we? So in 6 months, 12 months, 18 months time, as the economy is depressed, it doesn't seem to be the V-shaped bounce that we would have hoped for. So that means that this will become long dated debt, the amounts accrue, and we do have a big issue to deal with. I've seen Origin in today's report with their annual reporting talking about the bad debt that they're writing off as a business. So that's certainly one pathway. But equally, I think there'll need to be, as government looks as to what's the next stage post JobKeeper and JobSeeker, where are some of these targeted areas that really customers do need their support with. So there are mechanisms that can be done through the industry, but that probably shares the pain with everybody, and you can argue whether that's the right way or not, or equally governments can take a position, and I think that's probably the next debate that we need to have.
Yeah, and as we think about the impact on customers, it strikes me too that a lot of the smaller businesses in particular within our industry are also impacted. So COVID's had an impact on charitable organisations that have a social responsibility. Lynne, working with the ECA, what would be your view? What have been the impacts on some of those businesses, particularly those who do the job of advocating on behalf of our customers?
Yeah, look, thanks, Kate. I was really glad to see this question sort of raised in beforehand, because it's quite tragic in that sense that the people we rely on in our community, the Vincent de Paul shops, all of those charities that have traditionally relied on raising revenue as businesses, but to do good work and to support others in the community are really being challenged. I'd like to call out as well that I'm aware of a number of people in advocacy organisations have themselves lost their job, and that I think makes for very challenging times. I'd also call out, there's a great organisation some of you may come across called Voices for Power, or Sydney Alliance, operates in Western Sydney, and they're basically community faith-based people who are volunteers, who go into people's homes, who in churches and mosques help people manage their energy bill or to deal with when they don't have English as a first language. And all of that great community work is struggling under COVID. Those people are all at home as well. So at a time when we need it most, we're finding it very hard to stay connected and to provide the support that would normally be helping the industry, I suppose, or backing up the industry to try and reach out.
And I think that goes, Lynne, to the next question that we've got, which is, and we've touched on it already, why are so many customers reluctant to engage with retailers and discuss support issues or options for helping them through this time? And we saw that in the research that Sand shared, that they're going to their finance companies, they're going to other sectors, but they're not really reaching out to the energy sector for that support. Cynthia, do you hear anything through the Ombudsman as to why that is?
I think part of the challenge that customers talk to us about is they'll start a conversation, but they're not given the information that actually resonates with them around the assistance they can get. So Emma mentioned before the payment difficulty framework. That's a minimum entitlement framework that customers have access to. Even pre-COVID, customers were regularly telling us that they weren't informed of their entitlements when they rang up to get assistance. So that's not to say that there's not strong programs within the retailers. It's making sure frontline staff are having the right conversations with people when they are reaching out. So to me, there's sort of two components to it. There's that awareness of you can reach out, but when you get there, it actually needs to be meaningful assistance available to you. I'll do a very practical example of when people are reaching out and it's not working for them is we've seen a uplift in customers contacting us because they're having issues getting their concessions applied to their account. A lot of these customers are customers who, as we've talked about before, have never needed to access concessions framework or income support in the way they are now. And they're hitting up against barriers in trying to navigate the instant relief that they would get through a concession applied to their retail bill because of the system and process issues within retailers. That just spirals then into they call us because they don't trust that they can get that issue resolved directly with their retailer. So I see it as a two-pronged issue, both the awareness but actually making it as easy as possible to get customers the assistance they need when they need it.
Yes. Emma, have you got any insights from some of the other industries that you've done some research with that can bring some light as to how the energy industry maybe can do better in that?
Well, I think, going to Cynthia's point, there's that information gap, and then there is that that problem that when people do access assistance, it's often not a positive and useful experience. So in our survey of the 46 of those people who did seek assistance with their energy bills, so payment assistance, 46% of them had a negative experience. So, that's unacceptably high. I think what we're seeing in other sectors perhaps, and housing's probably the standout at the moment, and I mean primarily mortgage providers, banks there. The rental sector is leaving a lot to be desired. I think they've recognised the need for strong and immediate and collaborative action. There's obviously been high level government intervention there as well. For obvious reasons, there's huge financial stability risks if the property market crashes. So those mortgage deferrals have been very important, but it would be good to see, I think, government, kind of propelling that action and that visibility of the action by the energy sector as well. I think in terms of those barriers to help seeking and engagement, the other thing we might be seeing at the moment, and our survey was run in May, and we'll be doing monthly survey runs, so we'll see how this tracks. But housing was the main area where people took action back in May. So what we might be seeing at the moment is people prioritising other big household expenses. We might be seeing delayed action in terms of seeking assistance with energy payments. And that's consistent with previous research, which shows people will prioritise their rent and mortgage payments above all else. They'll try and sort them out first, and then they'll look at other household bills. So I think we're probably, well, for a variety of reasons, but including for that reason, we are probably going to see a bit of a delayed reaction in terms of help seeking with energy bills.
Which makes you sort of think that the question of what measures should be on the table. What are the measures that we should, as an industry, be considering? And we've got some interesting comments in the chat. I think people are concerned about making sure that they're measures that really impact the most vulnerable, and they have impact where they're meant to. What are those sorts of measures? And Lynne, I wonder if you've got a perspective on that.
I think I've probably got a bit of an unorthodox perspective on that, I'm afraid. I guess I'm going to flip this around the other way and say I think we have to trust consumers. this is a once in 100-year situation. It's once in a 30-year recession. I think what you need is mechanisms that allow people to be the best judge of what they need and what help they need. I think we've had a lot of focus early on the kind of real emergency, making sure the power stays on, which I think is very important and absolutely critical. And I'd like to also recognise that a number of state governments came out and immediately announced packages. So in Queensland, you didn't even have to ask for it. You got $200, I think, off your bill. It just came in your bill and it was already reduced. So I think there is a role for that kind of government assistance. But I think longer term, and if we are thinking about this, which I do, that this is a longer term issue, then we do need to trust consumers and put mechanisms in place. A bit like mortgages automatically flex in a way. People know they have to repay them, but they have longer periods over which they can, if they're having problems now, defer the repayment. We have mechanisms like that in the community already. We use them for the higher education contribution scheme. They're called income contingency arrangements. So I think if we do think this is going to go on longer, we need to put some of those mechanisms in, and I think governments are going to have to be part of working with industry to design those, so that we're not really taking a sort of residual attitude that there's only so much assistance available and it's only going to go to the most deserving. We've got millions of Australians, many families needing help, and some of it's not that they won't pay, it's that they can't pay right now. So how do we actually work with them to actually work out what's the best thing for their family and for the business that's going to keep everybody whole, so that we all come out on the other side of this terrible time and a part of the recovery.
Yeah, some very interesting thoughts in there. Thanks for that, Lynne. Angela, are some of these measures things that you've thought about from a policy point of view? Are there other policies that you think we should be looking at?
I mean, to give thought, I mean, we've talked now and Lynne shared external sort of policy opportunity. I think there's an opportunity to look at internal policy offerings. So what we can impose back onto the industry to create their own internal policy. Is that, you know, a push around better communication, or encouraging the customers to utilise digital applications so they can get visibility of what their daily usage is, so they can make differentiated choices on a daily basis rather than wait until the bill actually gets sent out to them. I mean, are there opportunities around pushing out alerts, whether that's through an app or an SMS? More recently, I noticed that Jemena had pushed out communication, a mail drop to postcodes that were being impacted by an increased usage over that period of time. They happen to be those postcodes that are currently impacted by COVID-19. So I think that there's an opportunity to look at what is that internal policy. There's a lot of great discussion around external policy, but internally we need to give that a bit of a look. Also, internally, there are partnerships with credit bureaus. There's an opportunity to further partner with the credit bureaus so they could open up their data and share with us, you know, really what are the payment trends across the broader than just the energy industry, but broader industries. I mean, what are customers likely to pay first, second, third? Yeah, thank you.
Yes, we've got some questions about that as well. You know, are people prioritising telco over energy bills, and they're making those decisions? They've got to make those decisions because they can't do it all. So what are some of the factors that are coming into that decision making? I'm wondering, Emma, if you've seen any of that from your research, any of the thinking behind why people are prioritising particular bills?
We're not sure through our survey whether people are making those trade-offs. I mean, previous research suggests that people do make those trade-offs. There's some, you know, verbatim comments by survey respondents suggesting that, you know, there's belt tightening going on and across all areas of the household budget. You know, restrictions are being made and consumption's being reduced, and people are pulling back where they can. I think, as I mentioned before, at the moment we might be seeing a prioritisation in terms of housing costs, and then that may, I guess, yeah, as we see the supports wound back in that area, we may see some payment issues being exported to other sectors like telco, like energy. But you know, we are, I think the fact of the matter is we're seeing cost pressures across the board, across all major household expenses. And in that sense, it's really going to have to be, the responses to COVID are really going to have to be cross-sector. We think mechanisms like the Thriving Communities Partnership and that are fantastic for bringing different industry sectors together and working out, well, what does a collaborative response look like? And as you do start to withdraw or taper assistance in one sector, what does that look like? What are the ramifications of that for another sector? So how do you work in tandem?
It's clearly a time of extraordinary change, and one of the biggest changes obviously is working from home. I mean, here we all are dialing in to a webinar. And for energy industries in particular, the issue around that is obviously around particularly planned supply interruptions. And some of the behaviours we saw early on were certainly that customers were very concerned about power going off when they're working from home. So I'm wondering, Sean, if you could give us some insights onto the experience at Jemena and how we've dealt with that and what impacts we're seeing from customers from a supply interruptions point of view.
Yeah, absolutely, Kate. As a network, this has been one of the biggest issues we've really worked with over the last few months, and going back to March, you know, we were really scrambling initially to get our planned outage experience transformed, if you like, to meet the new circumstances with people working from home with much different expectations, schooling from home, huge pressure and expectations around that essential service that we know we provide. And look, planned outages, I think people would understand, look, that they are necessary to have them. This is for maintenance, for safety, connecting new customers to the network, upgrading the network to enable more solar energy to be exported. All these things mean that we do need to interrupt supply from time to time. But what was really clear was that customers were much more sensitive, and we did, just in the first week or so, we had a situation where one of our planned outages we were planning to go ahead with, and we had started communicating to customers, ringing up, and we did get the sense that some of the customers were saying they didn't want us to go ahead with it. We planned to go ahead at 7 AM the next morning, and one of the customers was saying that they were going to go to the media if we proceeded. So it was that evening, it was about 9 o'clock that night, I made a captain's call and said, let's not go ahead with this planned outage, let's pull it, the community angst is too great. And we deferred that outage for over a month. But then when we followed up with the customers the next day, they were really unhappy with us. And we'd gone through all this point about building it up for them, and whilst they weren't really happy that they had become resigned to the fact it was going to happen, and they'd put preparations in place within their own homes and their own lives. And so at the end of the day, we actually had to put them through the anguish twice of going through that planned outage effectively. So we did learn early on the critical issue was about communicating earlier. These things had all happened very close to the event, transparently, and really listening to hear what is being said. So off the back of those sort of the early induction, I guess, that we had, we have had a lot of good feedback. We hear from customers that internet's the #1 priority for them, followed by food in the freezer, given that, and also the pandemic's helped people stock up on food, so it's a really critical thing as well. Customers prefer their planned outages on weekends rather than during the week when they're working and homeschooling. And long duration, sometimes over 6 hours of what we need, that becomes a real hotspot, and so they're more tolerant of shorter outages of say 3 hours or less. So we've brought that together with some really active management, triaging what we do with planned outages, calling customers in advance, speaking to them. Often we can get to about 60% of the customers who might be involved, typically it might be 50 customers or so being impacted on a particular job, and then depending on the criticality, we may amend the timing, duration, or defer when this actually happens. And so I guess the key thing has been more communication, so calling. We've been carding more days in advance, and we've also introduced SMS communications as well. So in terms of how we find customers, we've used multiple sources of media to be able to find them in a way that hopefully that they're able to digest, understand what's happening, and are able to give us that feedback. So I guess the upshot of it is that we've actually seen our planned outage customer satisfaction, which is a piece that we monitor in our business as a quarterly measure that we go back to customers who have been engaged in that service, and that's increased from 7 to a number over 9, in fact about 9.2, which is sort of well above what we've seen as historical industry averages. So it's a great feedback for the team. There's been a lot of effort invested in making these changes, and great to see that the customers are broadly giving us that feedback that it's going in a better direction. And I think the main takeout for us is that this customer experience that we've responded to in the crisis that we're in, that's the standard that we want to aspire to post-COVID, and it's maintaining this as a sustainable way of being able to service our customers.
Cynthia, I'm going to assume that some of these supply interruptions have made their way through to the Ombudsman. So I'm wondering what your take on that, the management of supply interruptions, has been, and what other implications you might expect to see from working from home.
Yeah, Kate, it was our #1 complaint driver. Whoever would have thought that planned outages would be the #1 complaint driver to the Ombudsman, but late March it was our #1 driver. But for all the reasons that Sean's just mentioned, that's really dropped off. The industry has used this crisis as an opportunity to reimagine how it engages with customers in a really proactive way. For us, it really, though, highlighted the essentiality of electricity in particular, but energy more broadly for people in the current circumstances. I happen to have a water planned outage today, and yet I can continue to participate here. If I didn't have electricity, this would be a much more difficult process for me to be working through. So I think, the industry learning so much through this process around how to engage with their customers differently, around important and necessary infrastructure improvements and maintenance has been a really, really important opportunity and step for the industry to take. We hopefully don't see masses of planned outage complaints again in the future, because new practice, the good practice, becomes standard practice into the future. What we have though seen is lots of new connection delay complaints now, because customers still want you to get things done for them, albeit that social distancing and reprioritisation of work has made it more challenging. But I feel a heightened level of confidence that particularly the distribution businesses are thinking really differently around how to learn from this and how to actually engage with their customers in a much more effective way in the longer term.
Thank you. I don't think we're going to get to too many more of our questions, because we're starting to get towards the 1/2 mark. So I think what I'd like to do now is just ask a question of you all, and I'll give you all a minute or so to respond. But one of the questions that was pre-submitted was, what has your own personal experience of COVID-19 been, and would you have done anything different in your response to that? Can we start with you, Lynne?
Thanks. It's a great question, and I had to think hard. What I would say is probably, apart from personally, I've struggled, like all of us have, I suspect, to get enough exercise and get away from the Zoom screen. What I want to do is pay credit, I think, to an idea that came out very early in our very first staff discussion, the very first day we were working from home. And we decided to run a staff survey about what did we need to be supported from working from home. And I've literally been able to follow the results of that survey to make sure that all of us could stay connected, all of us could stay well. And I think that was my biggest fear when we moved to work from home, that would we all be able to get our work done? Would we all be okay? Would people be unsafe? And so I think I'm just so glad that we had that survey that was initiated by my team, not by me. So maybe what I would have done differently is I would have had the bright idea. But it's really helped. It's really helped us focus on the human part of all of this, which is so critical.
Thanks, Lynne, for sharing. Cynthia, what about you?
What I have, I suppose my reflection is a little bit like Lynne's. It's actually, I've been so proud of how the team has just responded. We had this lot of self-talk around we're change resistant, we're not agile enough. We had everyone picked up and working from home within 2 days of thinking, proud of that. But I have to say I've been really impressed with how industry and consumer groups and government have been coming together and recognising this is everybody's issue. You know, years ago, this wouldn't have been quite as smooth or even as timely, I don't think, but the responses that we've seen from people collaborating is something that I would like to see going forward. It's not someone else's problem or someone else in the supply chain, or it's government policy or it's an internal process. It's actually an opportunity for everyone to be coming together, not just for the benefit of industry, but benefit of the customer and consequently industry also in the longer term.
And anything you would have done differently?
Probably a bit like Lynne, I'd actually get off my chair a little bit more often, I think. I'm trying to take lockdown 2 as a new way to set new routines, because the routines from lockdown 1 were not all that healthy.
Thank you. Thanks for your honesty. I think many of us are in that situation. Angela.
I mean, my personal experience, apart from I reside over 2 states and I can't go and visit my father for a long period of time, as a consultant, I've really welcomed the opportunity to get to know my clients on a different level and for them to get to know me on a different level. I've had some embarrassing moments, and I'm sure there's some people on this call that have seen my daughter place bunny ears on me and carrots in my mouth to make me a bunny rabbit when I'm talking to my clients. But personally, I've really enjoyed getting to know people on a different level, and I've appreciated that. Would I have done any differently? I probably wouldn't have sweat the small stuff, right? So sometimes as a consultant, you get worried when you meet someone new or you're positioning a piece. Now I feel a lot more comfortable. Yeah, thank you.
Thanks. Emma, some insights from you?
I think similar experiences to other panelists. You know, feeling very mentally stretched, and I think that's and just recognising that, you know, the mental impact is broad and wide, and we're all probably struggling in our own way, some more than others. I think it's probably made me appreciate the in-person communications and interactions more. I take them for granted less, and they're very special when they happen. Likewise, just, you know, that brief experience of sitting in a restaurant or a pub, socially distanced, of course, you know, it was lovely, and we, you know, appreciating that is a nice thing. I think in terms of personal impacts, particularly at the start, you know, the first lockdown, we saw support measures that seemed impossible only a few months ago take shape very rapidly, and it reinforced that, you know, supporting vulnerable people, supporting all citizens is often a question of political and industry will, rather than, you know, real sort of genuine barriers to action. Like financial barriers, you know, the money is there to provide, you know, the unemployed with a dignified life that allows them to pay their housing and food and energy costs, and we're seeing that with the boost to job seeker and other payments. So I think that's reassuring, and it gives us some momentum to sustain that, however long it takes to deal with COVID, and then in the world afterwards.
Thanks, Emma. And Sean, if we could finish off with some personal reflections from yourself.
Yeah, look, probably in hindsight, I might have ditched my Qantas shares and got into Coles a whole lot sooner when this happened in the toilet paper industry. You know, sitting in this room, gone in and purchased the ergonomic home office equipment before it all ran out of stock at Officeworks, and but before I got my bad back, which happened early on. We've made it through all that. Look, probably in the work environment, look, the biggest surprise has really been how well we've all transformed to this work from home arrangement. It's been amazing, and I think that's been a fairly universal experience, and it's amazing really that the ability to connect is, you know, or in some ways it's actually much better than it was before. We now have sort of virtual team sessions with hundreds of our colleagues together. They're arranged at shorter notice and actually get much more positive feedback about how effective they are from an engagement point of view, which is really interesting. So the team's been really adaptable to our circumstances, and we've had really positive responses when we've done those sort of polling across our teams. And it does also, we've seen that, you know, the care for each other has been a really strong company value that comes through in terms of looking at well-being. So look, probably I guess the main reflection then is, look, why didn't we do this sooner? We needed a crisis to push us into us, and it also shows with the working from home, you know, how much we can trust our teams to grab what needs to be done and get on with it. You know, there's been no, you know, degradation in productivity across there, and people have connected really incredibly well. So I think great reflection, but also for those who haven't worked from home, I just would want to call out our field crews, those who come into the office in the control room, those people who are actually going out and putting themselves at risk in a COVID environment, much like healthcare workers. You know, they're doing a fantastic job, and really appreciate them bringing us through this so we can continue to bring the energy to life for our customers.
Thanks, Sean. Well, I'm afraid that is all we have time for, so that's the end of our conversation. A special thanks for participating today for Santa Pereira, Lynne Gallagher, Cynthia Gabert, Angela Jarek, Emma O'Neill and Sean Reardon. To Andrew Davis for volunteering us all to do this and being the powerhouse behind the event. To Sabine Heindel for the support of the Energy Charter. All the Jemena team who have worked behind the scenes. And of course, a big thanks to all our attendees. I hope you've enjoyed the discussion as much as I have. You'll receive your placemats shortly, and we hope to see them well used, plenty of crumbs and coffee stains on them. And I hope you enjoy the rest of your afternoon. Thanks for joining us.